Hey guys, welcome to this video where I'm going to walk you through, as a credit spreads trader, how to turn every loser into a winner. Now again, I know that's not possible, but my goal to you is to turn every loser into at least a smaller loser using one of these three strategies. So I'm going to walk you through each one of these strategies, show you how it works and how to implement it so you can save yourself instead of experiencing these max losses you're seeing, which is pretty big. Anyways, let's walk through this. First and foremost, I have to say you want to make sure that you're trading a strategy that works. If you're not trading a strategy that works, that has roughly an 80 to a 90% win rate, consistently speaking, on a historical basis, not a guessing, not a math basis, like where you go to the options chain and you look for a delta between 15 to 25. That's not what we're talking about. We're talking about a real strategy based on the trend, based on historical accuracy. So again, if you have that, then you'll be set. If you need to find one of those strategies, you can click the link below for my free trading handbook. Anyways, let's go through this right here. Okay, so I'm going to walk you through how this works on the Credit Spreads Trade Saver. It's going to walk you through for a trade example, but then again, I'm going to walk you through the details on this whiteboard right here. Now again, if you're wondering what this Credit Spreads Trade Saver is, you can get access to it for free when you join the 10% Credit Spreads Inner Circle program, which is open for the next 2 days. Again, this program is closing very soon. It's only open 4 days a month. Then the rest of the month is spent helping my current members make money. So again, if you want, like for instance, the Trade Ideas algo for alerts, your trades tracker, this trade saver, your Discord group, bonus calls, and a free options trader t-shirt, then again, this is the program for you. Anyways, let's dive into this to help you save on your losers. Okay, for instance, let's just say that we have a trade on SPY. Let's say it's a put credit spread. Let's say that, let's pull up SPY right now and give us a good example. SPY. I don't know why this is here. Okay, SPY. Let's say we're currently trading a put credit spread on the way up. We have, let's say it's currently at 434 is our strike, and we're trading it up. So let's say 434. 434. We're just doing a simple $1 wide, so it's going to be 433 for our long strike. Let's say we collect about 25 cents for that. Actually, that's probably closer to 30 cents that we're trading. Trade size, again, let's say we're trading about 10. So again, on this trade, we stand to make $300, but we also stand to make $700 the way that it sits. So let's see 3 different ways to save this trade. Okay, cool. So again, we have option number 1, which is our expiration day plan. So again, we wait until the day of expiration. Let me just walk you through this, okay? So again, the explanation of this approach here is this strategy has a high probability of working in your favor to mitigate your loss because you are trading with the trend at the moment. This means the trade is more likely to come back in your favor, and if not, you can close on expiration day after letting theta decay do its work. So this is saying right here, the stock that you're trading is trending up, and you're trading a put credit spread, which makes money to the upside. So you're trading with the trend. So let theta do its work. Let the options slowly become worth less and less and less. And if it ends up being against you on expiration day, you'll be able to buy or back or close that trade for significantly less than your max loss. So for instance, our max loss is roughly about 700. You can close the trade if the trend's going in your favor for about 50% of your max loss. So now you're only risking 350 instead of risking, let's say, 700. Next, option number 2, again, it's highlighted green because this is your ideal strategy. Option number 2 is going to be your early close plan. So again, this works best for trades that are not trading with the trend and are currently losing. But based on what we're doing, it doesn't look like that. Hence why it's not highlighted. But otherwise, it's best to say in the trade. Anyways, this plan is for if the market trend has turned against you. Let's say you're trading a put credit spread, and the market now turns to a downtrend. Well, this will alert you to when it's down, turning into a downtrend, and it recommends that you just close the trade early. You just close the trade out no matter where it is when the trade starts going against you, and that's the best way to mitigate losses. Option number 3, this is for people who 100% believe in the direction that they pick. So this strategy eliminates the loss from the current trade. So instead of experiencing a loser like these, you'll still experience maybe a 50% loss on the max loss, but this one right here will reduce your max loss completely. But again, if you're wrong, it'll actually double your max loss if it goes against you again. So you are currently trading with the trend. This new trade has roughly a 50% win rate. This strategy can turn into a previous loser into a winner. So let me walk you through these specifics. Again, you're going to essentially roll this trade out, and let me walk you through what this looks like. Let's say we put on, let's say we saw the trade right here, and we put on a put credit spread at the 200-day moving average line, or moving average line. You can see here we entered the trade here. This was our breakout. Now again, it's closing. The trade let's say this is the last day. The trade looks like it may close below our strike price, which means we're going to experience the max loss. Well, what we do here is we're still a fan of this trend. We can take this trade, go out another week, and roll it out slightly down, maybe $1 or $2, and then also roll out to 7 days. And now we have a new trade where we're entering in around break even because we're buying back and taking away all our max loss risk. So we're entering in for about a $0 debit, but also $0 credit around there. And now we have another 7 days for the trend to continue up in our favor, where we removed the max loss, and the max loss is no longer there given the stock stays in our favor. If the stock goes against us, because we have to double our strike width, then again we're going to see that double loss. But again, it walks you through right here. Roll the trade 7 to 10 days from the current expiration, place at the money trade, and double the width of the current spread. Again, roll the trade if it can be rolled for break even or a small credit. This shows you exactly step by step what to do with any stock you're afraid is going to lose, and it walks through the best plan and highlights your best option. Now again, that's exactly the strategy 1, 2, and 3. I guess I realized I don't actually have to walk you through this because I'll walk you through the steps right here. But anyways, that is 3 different strategies to save your losers and turn them into a winner, or maybe even smaller losers, which is going to help you in the long run. If you can take those max losses and dramatically reduce them, your overall win rate is going to jump up, and your overall profit kept and credit collected is going to be way higher than it would be if you're actually letting those max losses execute. Anyways, guys, if you want this Credit Spreads Trade Saver for yourself, then again, for free, you just have to come in here and check out and grab and test drive the Trade Ideas Algo. Again, this is only available for the next 2 days, and it's closing for the next month. All right, guys, see you in the next video. I hope you enjoyed this. This is Austin from 10% Credit Spreads, and I'll see you in the next one.